Welcome to Accounting Year YouTube channel.
Hello, welcome to another session of Capital Allowance by Accounting Yard. This particular class is to walk you through a template created by Accounting Yard around capital allowance. As we know, this is a period in which a lot of businesses who have a year end of December are currently preparing their tax computation to meet up with the deadline for filing of their taxes this July. Due to the pandemic, was extended by 1 month. So right now, one of the major challenges that people face is calculation of capital allowance to be used in the computation of their taxes. Now, we both we know that capital allowance is what the taxman uses and disallows depreciation because of varied approach used by various businesses in computation of that depreciation. However, capital allowance has certain rates that are applicable, which is defined in our DV sheets, whereby we put various classifications, classes of assets that you could have, and what you could earn from them in terms of investment allowance, annual allowance, and initial allowance. We have defined our terms here in this sheet called year of acquisition of the assets, year of full utilization. IA1 is initial allowance for the asset, IA2 is investment allowance for the assets, AA is annual allowance, ACC is accumulated annual allowance, and TWDV is tax return value of the assets. While CAC is capital allowance available for utilization in a particular year. Now let's go to the schedule itself. This is schedule in which the user can enter the class of assets he's interested in, and based on it, this schedule automatically does a recomputation. So for example, I change from furniture and fitting to building, it automatically changes the value. Now, this is the nature of assets which we may have in our assets register. This is the cost of the asset, and this is the date of acquisition that we have in our assets register. Column F and column G are computed by the system. Right. Then we have our initial, our investment allowance, annual allowance, and accumulated annual allowance. So this is annual allowance that I expect to earn on a particular asset in a year. This is accumulated as we earn on that asset over the period from the date of acquisition to the year of assessment. Now, in TOC sheets, we have a place where you can toggle around the various years. So if I change to 2016 and I come to the schedule, you see that all assets acquired after 2015 are not computed because they fall after the year of assessment. You know, the taxman says the year after the year of acquisition, so which is 2016. So nothing in 2016 for only 2015. Go to the TOC sheet, you change to 2019, and come here. You see that it's computed for a chunk of them down, but you see that assets acquired in 2019 are now available. Now, we've taken our time to consider what the taxman uses in terms of the various classes of assets, the investment, annual and initial allowance available, and we've defined a template that can help you handle this. You can reach out to Accounting Yard if you want a template like this, and we can discuss further. Thank you.